Hi everybody, welcome to my presentation. I'm Shahjahan Karamov, is an MBA student at Westcliff University. Today, we are going to be talking about accounting in business and accounting for business transactions. This is our table of contents. We have brief summary of major concepts. What's trial balance and its purpose? How is the balance sheet derived from the trial balance? And we are going to be drawn by conclusion. Purpose of these slides, we are going to introduce key points and learning outcomes. Key points. These are our key points. Today we are going to talk about accounting. What is the difference between financial accounting and managerial accounting? Then we're gonna discuss about general acceptable accounting principles, international financial reporting standards. Okay, actually, what is accounting? Accounting is the process of recording financial transactions pertaining to business. The accounting process includes summarizing, analyzing, and reporting these transactions to oversight agencies, regulators, tax collection, and tax. The financial statements used in accounting are a concise summary of financial transactions over an accounting period, summarizing a company's operations, financial position, and cash flows. Actually, accounting involves identifying, recording, and communicating. What is the difference between financial accounting and managerial accounting? Financial accounting involves the systematic recording, summarizing, and reporting of entities' financial transactions and activities to external stakeholders, providing a comprehensive view of its financial performance and position. On the other hand, managerial accounting focuses on the providing internal decision makers with relevant financial information and analysis to support planning, controlling, and decision-making process within an organization. This is the ethics and fraud terms in accounting. Fraud triangle can be opportunity, rationalization, and pressure. Standards and control boards. FASB, Financial Accounting Standards Board. INSB stands for International Accounting Standards Board. GAAP stands for General Accepted Accounting Principles, which is mainly used in United States, and then International Financial Reporting Standards. Accounting equation. The relations of assets and liabilities equity is shown in the following accounting equation. The accounting equation to all transactions and events, to all companies and organizations, and to all points in time. Assets equal liability plus equity. This equation can be rearranged. The example like assets minus liabilities plus equity. We can generally separate equity into four parts to get the expanded accounting equations. Equity assets equals liabilities plus contribute capital plus retained earnings equal liability plus common stock minus dividends plus revenues and minus expenses. This is an income statement. Income statement is also known as a profit and loss statement, which presents a summary of organizational revenues and expenses, gains and losses during a specific period, indicating its financial performance and resulting net income or net loss. This is an example of a fast food company. As you can see here, revenues, which is $6,100 minus expenses, like $1,700, will be like $4,400 net income. Statement of retained earnings. A statement of returned earnings shows the change in company's returned earnings over a specific period, reflecting net income or loss, dividends, and adjustments to retained earnings, providing insights into accumulation earnings and distribution to shareholders. Uh, as you can see here, returned earnings was $0 because there was no return earnings for the previous year, and taking out $200 for the dividends, and then return earnings would be like $4,200. This is the balance sheet. Balance sheet is a financial statement that provides snapshot of company's assets, liabilities, and shareholders' equity at a specific point in time. This is offering a comprehensive view of its financial position and the relationship between its resources and obligations. This is the statement of cash flow. As you can see here, For fast forward company, the statement of cash flow summarizes the inflows in cash equivalents from operating, investing, and financial activities, providing an overview of entity's cash flow dynamics, its ability to generate and utilize cash over specific periods. We have cash flow from the operating activities, from investing activities, from financing activities, and then net increase in cash. This is the debts and credits in accounting equation. As you can see here, T account, assets, liabilities, owner capital, revenues, expenses. Debts and credits, they can be considered as a positive or negative numbers. Actually, it depends on the account. This is the return on assets, which is net income divided by average total assets. As you can see here, we have Nike and Under Armour company. Give an example, which has a good positive number on return on assets. This is the debt ratio, which is very good formula. Total liabilities divided by total assets. This debt ratio formula is used to evaluate company performance. What is trial balance and what's its purpose? Trial balance is a list of all general ledger accounts and their respective balance at a specific point in time. It serves as a preliminary step in the financial reporting process, and it helps ensure that debits are equal credits in the accounting records. The purpose of this trial balance to identify any errors in the recording in position transactions. It provides a summary of the account balance sheet balance before preparing financial statements. Okay, how is the balance sheet derived from the trial balance? The balance sheet is derived from the trial balance by organizing the accounts into the appropriate categories such as assets, liabilities, and equity. The account balance from the trial balance are used to determine the amounts to be reported on the balance sheet. Assets are listed first, followed by liabilities, then equity. Total liabilities and equity as per the accounting equation. As you can see here, from trial balance to balance sheet, for example, assets can be a lot of things, depends on the assets. A lot of like transactions depends on the equity sides. As you can see here, the net assets 1200 is causing because of the fixed assets like 1500 minus by accumulated depreciation $300. This is resources that I used, textbook and videos. Thank you for your attention. If you have any questions, please email me. Have a nice day. Thank you. This is the end of the presentation. If you have any questions, please feel free to email me.